Hello everyone, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we are going to discuss a tutorial on golden parachute. As you can see over here, Marissa Mayer will make over a 44 million if Verizon fires her. This was quoted in the Business Insider. As you can see right in front of you, the article is there. Okay, I'll just read it for you. Marissa Mayer became the subject of the widespread speculation for the reason other than her performance at Yahoo. Ever since Verizon agreed to buy the internet giant, industry has been abuzz with the exorbitant golden parachute that Marissa would be flying with. In this case, the former decides to terminate. As you can see, the details of Marissa Mayer's cash, equity, benefits, and total details. Okay, compared to the other. The latest being the buzz around the ExxonMobil Rex Tillerson, who is likely to receive golden parachutes of $180 million from the company in the event of his confirmation as President-elect Donald Trump's Secretary of the State. Merger is a major event in the corporate landscape and brings about a great deal of changes in all the companies involved. While some changes are forcing, other remains ambiguous. However, what is intriguing is the fact that the changes flow across each level in the corporate structure, and the Helms is not exception. Many a times, high-ranking managers and executives lose their job in the process of merger. But what is interesting enough is to note that in fact, it's not the absolute loss for them. Usually, the companies undergoing merger compensate the top level executives with the astronomical amounts, and this is known as golden parachute. What is golden parachute? See, technically, golden parachute is defined as a contract between the company and its top level management, which entails that the executives will be offered considerable benefit in case the latter is terminated as a result of the restructuring activity. These benefits usually include cash bonus, stock options, retirement package, medical benefits, and of course a handsome severance pay. It is also used as a tool for anti-takeover mechanism or poison pill to dissuade any potential merger. The quantum of benefits or the compensation promise of the company might lead to many acquirers to change their takeover decision. Let's get into the flashback, history of the golden parachute. The history of the golden parachute dates back in closer to 1961 when Charles became its first recipient. It is said that the amidst tug of war to push off the Howard Hughes, he was offered a generous golden parachute in case Hughes gained a control of the company and fired Tillinghast. However, the tide of the event was different and Charles Jr. continued in the company for 15 more years. Amusingly, he also never collected the parachute. The name golden parachute is used to denote the soft and the safe landing of the terminated executive with monetary benefits way above the usual severance packages. While this was an isolated incident in the 60s, it soon became a preferred way of compensating white-collar employees, particularly in the late 70s. Hostile takeovers became the order of the day in 1980s, and the US corporate landscape saw a surge in the golden parachute. As per the Harvard Business Review (HBR), by 1986, around 35% of the largest 250 US corporations had implemented a clause stating that their executives will be provided with cash payments along with the range of other benefits in case there is a change in hands. As you can see, the rapid rise of the golden parachute, this is the graph in front of you. In the 1980s, there's a complete stiff rise. You can see the graph is continuously going up and up. Cumulative number of the contracts is increasing like anything. The graph shows that there was a significant rise in the golden parachute contract in the decade between 1980 and 1990. The cumulative number of the contract jacked up by around 75 to 300. Earlier, only small companies fell prey to hostile takeovers. However, with the popularity of the junk bond market, financing becomes comparatively easier, and even large multinational Fortune 500 companies become easy targets of hostile takeovers. During this period, several companies included the clause of golden parachutes in their employment contracts in an attempt to retain high qualified employees. This was considered a major element of the security by high level of executives before they took up the jobs in merger prone industry. Needless to say, it was defensive mechanism also for the hostile takeover as it increased the cost of the takeover considerably. This was the reported golden parachute payment as a percentage of the target equity. Okay, advisory firm like Institutional Shareholder ISS, Institutional Shareholder Services, has revealed a trend that the quantum of the golden parachute as a percentage of the target's equity value increases as the deal size becomes smaller. So this graph shows that the size of the reported golden parachute payment as a percentage of the target's equity value for 25 largest deals announced between May 13 and April 14, and also includes 65 companies that enhance the compensation for the executives. Let's understand what is a difference between golden parachute, golden handshake, and golden handcuff. These are the three things. Many times there are very few terms being interchangeably used like golden parachute. One of them is called golden handshake. Golden handshake is nothing but an upgraded form of golden parachute. The severance package in the golden handshake is a bit more generous than the latter. Another minor variation is that golden handshake are offered to high ranking executives who are terminated through dismissal, corporate restructuring, or even during their scheduled retirement. The severance package for golden handshake includes cash, equity, and certain stock options. There can be other elements included in as well, because which solely depends on the discretion of the companies. Another term used in the similar sense is golden handcuff. While the golden parachutes and golden handshakes may have a high level CEOs more inclined towards the exit to receive the hefty packages waiting for them, golden handcuffs acts in the opposite way. They act as a disincentive for the executives for leaving the company and joining the competitors. It is said that under the clause of golden handcuffs, executives have to give back the bonuses and reward received if they leave before the stipulated period. Let's see what are the benefits of these golden parachutes. See, there are two perspectives of evaluating the nuances of golden parachute. One is from the company's perspective and other from the shareholders' perspective. First of all, no company can function if there is a conflict of interest at the key management level. While certain takeovers are hostile, some of them can even be beneficial for the company's future and growth. If the key personnel becomes insecure about their job, they may try to cause hindrances in the merger or takeover process. On the other hand, with golden parachute, employees can be secured about their compensation and offer complete cooperation the merger process. Once the terms of the severance package is laid out, the exit of the white collar executives become more cordial. Things go in accordance with a predetermined agreement and there is no bad blood. This also protects a company from being malign by the key personnel in the event of the termination due to merger. See, the possibilities of the hostile takeovers are reduced with the clause of golden parachutes being included in the contract. The acquiring company might not find it appealing to shed such an expensive package if it plans to ouster the key employees already in the control. Let's see the top 10 golden parachutes. As you can see, these are the top 10 golden parachutes: Wynn Resorts, Simon Property Group, Maxon, Discovery Communication, Oracle, Broadcom, Texas Instruments, and Lockheed Martin. You can see the amounts and the CEO names right over there. The golden parachute, what are some of the criticism and controversies going on behind this? See, something seemingly so attractive cannot be sans controversies and criticism, isn't it? Golden parachutes have been the favorite punching bag for many critics. The groups particularly miffed with our shareholders and the other employees of the company. Few reasons why golden parachutes are usually opposed to are the contour of the package is mammoth, which leads other employees entitled to receive a generic severance package to feel as deprived, neglected, or less privileged. So this kind of dissatisfaction among the existing employees from a hindrances to smooth functioning of the company. Many a times the top level executives underperform or to do something unethical due to which they may end up losing their job. Many companies offering the golden parachutes are silent on this aspect, and the clause ends up being an incentive to erring managers who are terminated. Needless to say, shareholders and employees will not feel good about it. Example, Tony Hayward, the chief executive officer for British Petroleum, was terminated due to his perceived lack of leadership during the infamous oil spill that tarnished his tenure. However, he is reported to have walked away with severance package of more than $1 million and an 8-digit pension amount. Critics feel that it is responsibility of the management to act in the best interest of the company. If a white-collar executive loses his job because of the friendly merger, there is no need for the company to compensate them in addition of their already fed package. Another logic against the golden parachute is that if the acquirer has a deep pockets, the compensation cost may be a trivial amount of him. Hence, the idea of using golden parachute as an anti-takeover mechanism is rendered futile. Shareholders in the particular are not too fond of golden parachute because many of them are on the opinion that it is unnecessary to waste of shareholders' money. They feel that many CEOs who are promised hefty severance package will only be enamored by it and not work for the long-term goals of the company. Whether or not their fears are genuine is difficult to conclude it. Though in research paper titled like Golden Parachutes and the Wealth of Shareholders by 𝐏𝐚𝐭, it is stated that over the long term golden parachutes may be harmful for shareholders' value. Those companies which implement the golden parachute clause obtain low risk adjusted stock returns as compared to the counterparts, in spite of the fact that the latter are more likely to be acquired. The researchers explain that golden parachutes make an acquisition like a cakewalk for CEOs and they aren't afraid of being acquired. Therefore, they are not motivated enough for enhancing the shareholders' value. I'll tell you some of the regulation for golden parachute. The ongoing oppositions have gained considerable momentum over the couple of years. So much so that the Congress has released the tax rules in move to discouraging rampant golden parachutes involving too generous severance package. Additionally, in 2010, Section 951 of Dodd-Frank Wall Street Reform and Consumer Act has also made it compulsory to obtain votes of advisory shareholders on all instances of the golden parachutes. Henceforth, in 2011, SEC unveiled new clauses on the say of the pay vote of Golden Parachute. The say on pay vote request investors to vote on the compensation of the top executives of the company, the CEO, the CFOs, and at least three other most highly compensated executives. About the Golden Parachute, the SEC mandate that the companies are required to comply with the Golden Parachute shareholders advisory vote and disclosure requirement in proxy statement to approve a merger and acquisition similarly form initially filed on or after 25 April 2011. According to the consultancy, Peel Meyer, the data between 2011 and 2014 reveals that merely around 5% of the Golden Parachute votes garnered less than majority support, even though in most of the cases the shareholders were not opposed to the actual merger. Concerned shareholders are now taking a stand against the golden parachute they do not deem appropriate. Tax post what I mean I want to see a tax perspective of golden parachute. The internal revenue code has three component pertaining to the golden parachute. As per section 4999 of the IRS, a 20% excise tax is imposed on additional to the normal income tax on the excess parachute payments, while section 280G deem the payments under the golden parachute non-deductible to the company. These provisions are passed by the Congress as a part of the Deficit Reduction Act of 1984. Lastly, the section 162A of the Internal Revenue Code denies the tax deductibility of any compensation over and above $1 million unless the same is linked to the performance of the executive. This way, the underperforming high-ranking executive when compensated with hefty packages will come under the purview of this section. Let's make a final conclusion. Golden parachute is indeed an intriguing concept and the opinion continue to be divided on it. However, it has emerged as one of the most indispensable part of the CEO's compensation package. While the clause seems important to lure and retain immensely talented executives in the company, underlying ambiguity causes many to take undue advantage of the situation. Even though many provisions have been adopted to curb the blatant misuse of the golden parachute, unfortunately, they have not been able to realize to their full potential. Golden parachute is quite, it's a bad thing, ubiquitous, and corporations have been using various strategies to circumvent the provisions under section 4999 and section 280G of the Internal Revenue Code. The clause must mention in particular that the package is intended only in the event of the hostile takeover. Noticingly, the misuse many companies have been tweaked the condition pertaining to the golden parachute. While many have reduced the size of the package, many have included ethics clause to exclude any errant CEOs from drawing the golden parachutes. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.